let's jump right into this explainer. Today, we're looking at a setup that absolutely thrills technical analysts, and honestly, for good reason. We're talking about multi-year breakouts in the Indian market. You see, when a stock consolidates for years and then suddenly pushes out of that range, it's not just a blip. It represents a massive, undeniable shift in long-term supply and demand. We're going to break down 7 specific stocks that are showing this exact potential right now on the charts. So what exactly is a multi-year breakout? Basically, it's a technical pattern where a stock chops around sideways for years. We're talking 4, 10, maybe even 20 plus years. Then, boom, it suddenly breaks out with massive volume. It's a huge signal that the underlying supply and demand dynamics have fundamentally shifted. These are some of the most closely watched setups in all of technical analysis because the upside possibilities are just incredible. But, as we'll get into later, they are possibilities, not absolute guarantees. All right, Section 1, the power of breakouts and historic resistance. Let's see how this actually translates into actionable setups, starting off with RICOAUTO Industries. 21. Just think about that for a second. That staggering number is how many years it's been since RICOAUTO last touched its historic resistance zone. If we zoom all the way out on the multi-decade chart, the stock is currently testing the 150 to 157 rupee zone, a level it literally has not seen since back in 2005. Now, what's really fascinating here is what's happening just under the surface of the price action. Look at this massive buildup in weekly trading volume as the stock marches toward this 2-decade high. If we get a decisive weekly close above that 155 rupee zone, that could confirm a truly historic breakout, essentially wrapping up 20 long years of base formation. Now, putting these two setups side by side is a perfect way to show how breakouts can take on completely different shapes. Over on the left side, we've got South Indian Bank. It's testing a horizontal multi-year peak right around 48 to 50 rupees, which is a massive resistance level left over from the 2008 cycle. Thanks to some serious volume accumulation, a 16-year trendline breakout is totally back on the table. But on the right, MANALIPETC paints a totally different picture. Instead of a flat horizontal ceiling, MANALIPETC is building up momentum right below a 4-year falling trendline. It's steadily making higher lows, potentially gearing up to end a long, frustrating consolidation that kicked off from its 2021 highs. Moving right along to Section 2, the classic Cup and Handle, featuring Ujjivan Small Finance Bank. This one gives us a textbook look at one of the most famous charting structures out there. What we're looking at here is a classic cup and handle pattern forming beautifully on the weekly time frame. Think of the cup as a long, rounding bottom recovery, almost like a giant U-shape. Then the handle is that tight, narrow consolidation happening right underneath key resistance. When you look at it that way, you can completely see why technical analysts are watching the setup like a hawk. The really crucial takeaway here is the volume. We're already seeing a strong spurt in volume during Ujjivan's green weeks. If the stock can gather enough strength to push right through the neckline of this handle and do it with solid volume confirmation, it signals what analysts expect to be a very strong, aggressive continuation leg. Okay, Section 3, long-term base accumulation, focusing on WANBURY Limited and UNIPARTS India. Let's dig into this pair because they brilliantly showcase the power of long-term base building and those sneaky little clues left behind by institutional money. 18 years, that is a lifetime in the markets, and that's exactly how long the structural chart for WANBURY has been quietly developing. This is absolutely one of the longest setups we are looking at today as it grinds its way toward an 18-year trendline resistance level. Comparing these two perfectly highlights the stark contrast you can see in accumulation phases. On one hand, you have WANBURY's massive 18-year structure, which is now accompanied by a gigantic volume surge that completely dwarfs its multi-year averages. That is a screaming indicator of major institutional interest. But on the flip side, UNIPARTS India is forming a much tighter 3-year base building pattern, kind of an accumulation box since it was listed. It's creeping up on that upper boundary right now with steady volume, telling us that a serious expansion phase could be right around the corner once it clears that roof. Up next, Section 4, a massive structural range break with TBZ. This brings us to our 7th stock, and wow, it just made the kind of monumental structural move that traders absolutely live for. For 14 long years, TBZ has been completely locked in this massive, sprawling consolidation phase. The stock's been over a decade slowly carving out a gigantic cup and handle pattern, testing the patience of literally anyone who tried to hold it through all that chop. But look at what just happened. TBZ finally broke out toward those multi-year highs near the 280 to 290 rupee mark. And it didn't just sneak over the line. It was backed by an extraordinary surge in volume. Smashing through a 14-year structural range with that level of intense buying pressure, yeah, that almost always signals a definitive major shift in the primary trend. Which brings us to our final and most important point. Section 5, Essential Risk Management and Safeguarding Your Capital. Listen, looking at these historic multi-year charts for stocks like RICOAUTO and TBZ is incredibly thrilling. It's easy to get hyped up. But let's ground ourselves for a second and talk about the actual professional discipline required to trade them without blowing up your account. If you want to protect your hard-earned capital while trading these setups, you absolutely have to stick to some strict risk management rules. First, always wait for volume confirmation on weekly candle closes. Do not jump the gun just because you see a quick spike on a Tuesday. Second, you have to protect yourself against false breakouts by setting sensible stop losses right below key support levels. And third, never risk more than your standard percentage per trade, no exceptions. At the end of the day, patience and strict discipline are the only things that separate successful technical analysts from gamblers. So while a multi-year breakout clearly highlights massive potential, you have to ask yourself, is a 20-year base an absolute guarantee of success, or just the beginning of the real test? I'd love to know, which of these 7 multi-year setups is on your watch list this week? Drop your thoughts in the comments below. And hey, don't forget to like and subscribe for more technical chart explainers. Catch you in the next one.